If you're watching this video, you probably hold some Bitcoin or ETH. But let me ask you this. Are you holding any of those fancy new Bitcoin or Ethereum ETFs that everyone's been buzzing about? You know, like BlackRock's IBIT or Fidelity's FBTC. And more importantly, should you be holding them? Like, what's the difference between those and good old-fashioned BTC and ETH? Well, if you have any of these questions swirling around your mind, then don't worry, because today I'm gonna break down everything you gotta know about these new crypto ETFs, so you can decide if they're right for you or if they're even worth your time. Now, before we dive into the nitty-gritty, let's take a big step back and look at the bigger picture here. You see, crypto ETFs have been a long time coming. Issuers have been trying to get them off the ground for over a decade, but the SEC kept on putting up roadblocks and straight up denying them. But in 2021, we finally got a breakthrough when the first Bitcoin futures ETF was approved. And then, in 2024, the floodgates really opened when all the Bitcoin and Ethereum spot ETFs got approved. This was a massive moment for our industry because it meant a new level of acceptance and legitimacy that we didn't have before. I mean, just think about it. For the first time ever, investors could gain exposure to Bitcoin and Ethereum through a traditional regulated financial product. No more messing around with clunky exchanges and no more having to worry about your private keys. With these ETFs, buying Bitcoin or Ethereum became as easy as buying a share of Apple or Amazon stock. So as you can imagine, the introduction of these ETFs was huge, and boy did the market respond. As soon as these ETFs launched, we saw insane volume pour into them. We're talking institutional investors, hedge funds, and even regular folks who had been watching from the sidelines. They all wanted in. But why is this such a big deal though? Like, couldn't those people have just bought their Bitcoin on Coinbase? Well, arguably no, as these ETFs made crypto investing much more accessible than ever before. Picture this, your uncle is interested in Bitcoin, maybe even because you shilled it to him at your family gatherings, but he doesn't know the first thing about actually buying and holding it. You could tell him to sign up for an exchange, go through the KYC process, and even set up his own self-custody wallet. But let's be real, that's a lot of hoops to jump through for someone just getting started. Or he could just click a few buttons to buy some ETF shares through his existing brokerage account. And this, to me, is one of the biggest selling points of these Bitcoin and Ethereum ETFs. Also, the numbers don't lie. These Bitcoin ETFs have collectively become the most popular ETF of all time. If we look at gold's ETF in comparison, in the first 120 days after its launch, the largest and most liquid gold ETF in the world had around $2 billion worth of flows, and that's adjusted for inflation. But these Bitcoin ETFs, they've raked in a whopping $15 billion. Just let that sink in for a moment. And get this, there's research suggesting that some of the cash pumping into the Bitcoin ETFs is actually coming from people selling their gold ETFs. So the way I see it, this is an undeniable confirmation that Bitcoin is being considered a serious alternative to gold, aka a true store of value and inflation hedge. But anyhow, I think you get the point about why these ETFs are such a big deal. So let's dive into how they actually work. First of all, it's important to note that not all crypto ETFs are the same. You got futures-based ETFs that trade derivatives contracts tracking the price of Bitcoin or Ethereum. Then there are inverse ETFs that are designed to go up when the price of the underlying coin goes down. You also got leveraged ETFs that use debt to crank up the risk and potential returns. But for this video, we're gonna keep it simple and just focus on the heavy hitter, aka the spot ETFs. These are the ETFs that actually hold physical Bitcoin or Ethereum in custody, and they've been generating the most buzz and excitement among investors. But just how do they actually work though? Well, the ETF issuer goes out and scoops up some actual BTC or ETH. Then they lock up those coins with a custodian bank. When an investor buys a share of the ETF, what they're really getting is a slice of that crypto, not the crypto floating around the broader market. So the price of the ETF mirrors the price of the BTC or ETH being held in custody, minus any management fees shaved off by the issuer. Also, here's the key thing to understand. When you buy one of these spot ETFs, you don't directly own any Bitcoin or Ethereum. What you own are the shares in that ETF, and it's the ETF that owns the actual coins. So to put this all in perspective, imagine you want to buy a few shares of some Bitcoin ETF. First, you send a buy order to your broker. The broker then asks an AP, aka authorized participant, to apply for more ETF shares. That AP buys crypto from the open market and delivers it to a custodian. The custodian, who holds the crypto for the ETF issuer, will then send the ETF shares back to the AP. The AP settles the shares with the broker, and finally, the broker sends you your shares. So yeah, as you can see, this whole process is a bit complicated, but that's the price we pay for a secure and regulated system. Now, of course, you're probably thinking, not your keys, not your coins, bro, which is true, but a lot of investors really don't mind this, especially if the likes of BlackRock, who probably have some of the most robust security measures and insurance policies on the planet, are safeguarding their assets. And for many investors, the convenience and simplicity of these ETFs more than make up for any potential risks. So there you have it. Now you know how these spot ETFs function. But now you may be thinking, well, okay, so these ETFs are simple and easy, but are there any other reasons why they may be better than just buying BTC and ETH straight up? Well, in my opinion, one of the most underrated advantages of these ETFs is that they can give you some juicy tax benefits, especially for US-based investors. If you hold your ETF shares in a tax-advantaged retirement account, like an IRA or 401k, you could be looking at some serious tax savings. I'm talking about not having to pay capital gains tax on your trades and stuff like that. Now, technically, you could hold actual BTC or ETH in a self-directed IRA, but that's a bit more complicated than simply scooping up an ETF through your existing retirement account. Anyhow, tax advantages is one potential benefit here. But another one that's also flying under the radar is that you could potentially earn dividends from these. Here's the thing, most crypto ETFs do not pay out any kind of dividend or yield, for now. But something that I've noticed is that some European issuers are looking for ways to integrate staking rewards into their Ethereum ETFs, essentially allowing you to earn a yield on your holdings. And guys, let me tell you, this would be absolutely massive. Like, if the SEC gave the green light for these crypto ETFs to pay out dividends, then that means you get a sweet yield just for holding an ETH ETF, similar to what you'd get for staking ETH directly. I'm talking about returns that could potentially beat out traditional dividend stocks. And heck, even Warren Buffett might change his mind about crypto and scoop some of these up for that juicy dividend yield that we know he loves. So this is the kind of product that could bridge the gap between old school value investing and new age crypto markets. And that's why I think it's a benefit worth noting. Now, at this point, you're probably wondering if you should buy some of these spot ETFs or just stick to regular BTC and ETH. Well, as with most things in investing, the answer is, it depends. If you're more of a newbie who's curious about Bitcoin and Ethereum, but intimidated by the process of buying and holding these coins directly, then these ETFs could be a fantastic way to get started. Similarly, if you're a traditional investor who's looking to diversify your portfolio into crypto, then these ETFs could be a convenient way to gain that exposure without having to alter your investment process. You could literally just slot some of these crypto ETFs into your portfolio alongside your stocks, bonds, etc. But on the other hand, if you're a seasoned crypto investor who's comfortable navigating exchanges, setting up wallets, etc., then these ETFs might not be worth it for you. In fact, the additional fees and potential tracking errors could actually make them a less attractive option compared to just buying and holding the coins. After all, one of the core value propositions of Bitcoin and Ethereum is the ability to truly own your own money. And when you buy an ETF, you're essentially outsourcing that control to a centralized entity to manage everything for you. But anyhow, let's say that you've weighed the pros and cons and decided that you want to buy some of these. Well, in that case, where the heck do you actually go to buy them? Well, that's easy, as many of the big name crypto ETFs are now available on mainstream stock exchanges, right alongside your favorite stocks. So if you've already got a brokerage account with a major player, like Charles Schwab or Fidelity, chances are you can scoop up these ETFs just like you would any other stock. Now, it's worth noting that not all ETFs are created equal. Some may have higher fees, limited selection, or other restrictions that could mess up your ROI. So it's always smart to shop around and compare your options before settling on one. But yeah, I hope this has been helpful for those of y'all who were wondering about these ETFs. Personally, I may buy a few shares of these in my brokerage accounts, but for the most part, I'm gonna stick to regular BTC and ETH. But whether or not you decide to buy any of these, you wanna know what you must do if you wanna succeed in the crypto space? Well, you gotta follow 5 essential tips that I compiled after years of experience in this space and that I share with you exclusively in this video.